A new tax deduction could help many older Americans lower their taxable income. The IRS says eligible taxpayers age 65 and older may claim an additional $6,000 senior deduction for tax years 2025 through 2028. For married couples where both spouses qualify, that amount could be as much as $12,000. But there are important rules, income limits, and filing requirements seniors need to understand before assuming they qualify. Hello, and welcome back. Today we are covering an important tax update for seniors, retirees, and families planning their finances in the United States. The Internal Revenue Service has confirmed details of a new enhanced deduction for seniors, created under the One Big Beautiful Bill tax provisions. According to the IRS, the deduction applies to taxpayers who are age 65 or older and may be claimed for tax years 2025 through 2028. It is worth up to $6,000 per eligible person, or up to $12,000 for a married couple filing jointly if both spouses qualify. This update is important because many seniors are already dealing with higher living costs, Medicare premiums, prescription drug expenses, housing costs, and retirement income pressure. A tax deduction does not give money directly like a benefit payment. Instead, it may reduce the amount of income that is taxed. That means some seniors could owe less federal income tax, depending on their income, filing status, and overall tax situation. But this deduction is not automatic for everyone, and it does not mean every senior will pay zero taxes. The IRS says the new senior deduction is available for tax years 2025, 2026, 2027, and 2028. To qualify, a taxpayer must be 65 or older on or before the last day of the tax year. The IRS also says the deduction is available to eligible taxpayers whether they take the standard deduction or itemized deductions. The maximum deduction is $6,000 per eligible senior. For a married couple filing jointly, if both spouses are 65 or older and meet the requirements, the total deduction can be up to $12,000. However, there is an income phase-out. The IRS says the deduction begins to phase out for taxpayers with modified adjusted gross income over $75,000 or over $150,000 for joint filers. The IRS also says eligible taxpayers will use Schedule 1A additional deductions to claim this and other new deductions. For the senior deduction, each qualifying taxpayer must have a valid Social Security number, and married taxpayers must file jointly to claim it. This deduction was created as part of recent federal tax law changes. For years, seniors have already had access to an additional standard deduction under existing law. This new enhanced senior deduction is separate from that existing age-based standard deduction. In simple terms, it is an extra deduction on top of other deductions a senior may already qualify for. This is why the update matters. A senior who qualifies may be able to reduce taxable income further, which could lower the final federal tax bill. But the benefit depends on each person's income, filing status, and tax bracket. This matters because retirement income often comes from multiple sources. Many seniors receive Social Security, pension income, IRA withdrawals, 401k distributions, annuity income, investment income, or part-time wages. Depending on total income, some seniors may owe federal income tax. This deduction may help reduce taxable income for eligible seniors, especially those with moderate income. For some retirees, it could reduce the tax they owe. For others, especially higher income seniors affected by the phase out, the benefit may be smaller or may disappear completely. The most important point is this: the deduction can help, but seniors should not assume they automatically qualify for the full amount. For many older Americans, even a smaller tax bill can make a real difference. It may help with prescription costs. It may help cover Medicare premiums. It may support grocery bills, utilities, rent, property taxes, or transportation expenses. For couples living on fixed retirement income, the possibility of an additional $12,000 deduction could be meaningful. But seniors also need to be careful. This is not a monthly benefit. It is not a Social Security increase. It is not a direct payment from the government. It is a federal tax deduction that may reduce taxable income when filing a tax return. That difference is important for seniors, caregivers, and families helping older relatives with financial planning. From a retirement planning perspective, this is a strong and practical tax update. The biggest benefit will likely go to seniors who qualify by age, have taxable income, and fall within the income limits. It may be especially useful for retirees who receive income from retirement accounts, pensions, investments, or part time work. However, this should not be described as completely eliminating taxes on Social Security for everyone. The IRS describes it as an enhanced deduction for seniors. It may reduce taxable income, but each taxpayer's result depends on their full financial picture. Seniors should also remember that this deduction is temporary. Based on current IRS guidance, it applies only from 2025 through 2028, unless Congress changes or extends the rule later. For anyone age 65 or older, the practical step is simple. Check your filing status, income level, Social Security number requirement, and whether your tax return includes the correct schedule. If your situation is complex, especially if you have Social Security, pensions, IRA withdrawals, investment income, or state tax issues, consider speaking with a qualified tax professional. The new $6,000 enhanced senior deduction is one of the most important tax updates for older Americans filing returns for the 2025 through 2028 tax years. It may help eligible seniors reduce taxable income and lower their federal tax bill, but it comes with rules. You must meet the age requirement, income limits may reduce the benefit, and married taxpayers must file jointly to claim it. So before assuming you qualify, review the IRS guidance carefully and make sure your tax filing is accurate. Do you think this new senior tax deduction will make a real difference for retirees? Or are rising healthcare and living costs still too high for this tax break to help enough? If you found this update useful, like the video, subscribe to the channel, and share your thoughts in the comments. And remember, this video is for general information only. For personal tax advice, please check official IRS guidance or speak with a qualified tax professional.